Hello everyone, my name is Peter Shapansky and this is my MS Data Science Capstone project, predicting financial misstatements using accounting and audit data. The goal of this project was to build a machine learning model that can help identify companies with a higher risk of financial misstatement. Rather than treating this like a normal accuracy problem, I framed it as an audit risk screening problem, where the model helps prioritize which firm years may deserve additional review. For this project, I started with the public GitHub financial misstatement dataset. The original dataset included 28 raw accounting variables, 14 accounting ratios, and more than 140,000 rows, and covered fiscal years from 1991 through 2014. I then created a final modeling dataset by adding audit-based variables and merge indicators, testing standardized financial variables, and cleaning the dataset down to 47 predictors with 84,360 firm year observations. The main prediction target is whether a firm year was associated with a financial misstatement. So class 0 represents no misstatements and class 1 represents a misstatement. The biggest challenge in this project was severe class imbalance. Out of 84,360 observations, only 707 were actual misstatements. This was about 0.84% of the entire dataset. Because of that, accuracy is not a very useful metric. A model could predict no misstatements almost every time and still look accurate, but will not be useful for audit screening. So instead, I focused on class 1 performance. Precision tells me how clean the review list is or how many flagged firm years were actually misstated. Recall tells me how many true misstatements the model found. F1 gives a balanced precision recall score. And the PR area under the curve measures how well the model ranks risky firm years across thresholds. Review burden measures the percent of firm years that would need to review by an auditor. This is important because model is the only thing useful if I can identify risk firm years without creating an unrealistic amount of extra review work. My modeling strategy followed a full pipeline. I started with the raw financial data, the SCC and Edgar filings, information, and audit text indicators. Then I engineered features using accounting variables, financial ratios, and audit risk variables. Since the target class was extremely rare, I tested several imbalances handling methods, including oversampling, undersampling, and threshold tuning. For modeling, I test random forests, XGBoost, balanced random forests, easy ensemble, and ensemble approaches. The final evaluation focused on precision, recall, F1, a PR area under the curve, and review burden for class 1. The main idea was not just to find the model, but the highest score, but to compare models based on different audit objectives. This slide summarizes the final model comparison. The main takeaway is that no model wins every metric. The high precision model was the meta-weighted voting model with precision emphasis. It had the cleanest review list with 21.52% precision and only flagged 0.62% of the firm years. However, it found 34 out of the 212 misstatements in the test set. The high recall model was the recall threshold weight XGBoost model. This model found 175 out of the 212 misstatements, with recall of 82.55%. However, it also flagged almost 39% of the test set, so the review burden was very high. The balanced random forest model provided a more moderate option. It found 86 misstatements with a recall of 40.57% and a precision of 8.17%. The efficient balance alternative was a precision and recall weighted voting model with precision heavy weighing. The model had the highest PR area under the curve in the comparison at 11.29% while keeping review burden around 4%. It found 84 misstatements and achieved precision of 8.16%. So this table shows that the best model depends on the audit goal at the end of the day. High confidence review, broad detection, or review efficiency. And then when it comes to model trade-offs, this chart visualizes the trade-offs between precision recall F1 and area under the curve across my final models. In conclusion, final misstatements prediction is best treated as a trade-off between detection, confidence, and review efficiency. If the goal is high confidence review, I would recommend the meta-weighted voting model with precision emphasis because it gives the cleanest review list. If the goal is broad misstatement screening, I would recommend the recall threshold weighted XGBoost model because it identifies the largest number of actual misstatements. If the goal is an efficient balanced option, I would recommend the precision and recall weighted voting model and precision heavy weighting because it reduces the review burden while still maintaining useful recall and strong area under the curve. The feature importance chart also shows the random forest relies heavily on accounting-based variables such as soft assets, receivables, changes in cash sales, current assets, PP&E, and depreciation or amortization expenses. This suggests that assets, accrual, and revenue-related signals were important in predicting material misstatement. So this project shows that the machine learning can support audit risk screening, but the model should be selected based on the audit objective rather than a single universal performance metric. Thank you for watching. This slide includes my contact information and my original dataset link used as the foundation for this project. If you have any questions, please feel free to leave a comment or follow me on LinkedIn. Thank you so much. I had so much fun creating this project and studying this dataset.